To hire drivers, you've got to work fast and smart. Did you know Driver Pulse, a driver-facing mobile app from 10th Street, is 2 to 3 times more effective than texting and 4 to 5 times more effective than email at getting drivers to respond? Driver Pulse is the largest source of free driver applications in trucking, downloaded by almost 2 million drivers to find jobs, complete training, and communicate with carriers. Companies find who they're looking for, and drivers find their homes with Driver Pulse from 10th Street. A name you trust. That's 10street.com, TEN street.com.
Welcome back to another edition of Tech Call. Today we are covering the August market update. Don't forget to subscribe to Tech Call, the newsletter, on FreightWaves.com if you haven't already. Today, we are joined once again by David Spencer, the Vice President of Market Intelligence at Arrive Logistics. Welcome back, David. It's been a month or so since we have seen you. How has your summer been?
It's great to be back. My summer has gone really well. It's been brutally hot down here in Texas, but we're learning how to deal with that.
It's been miserable. It's like so humid you can like chew through the air, and it's horrible. I'm very ready for this part of summer to be over. But aside from that, other things that we want to be over is this, down trucking market. Everybody's been asking, well, when is it going to flip? When are we going to see the volumes return? And, we've seen some indications that indicate that we might have some return to normalcy, some normal seasonal demand. Is that something that you guys have seen as well?
Yeah, absolutely. And certainly from the, the spot market volatility side of things, we're seeing the pockets you'd expect to see heat up when you'd expect to see them heat up. You mentioned how the summer go. I think the summer went really largely as expected from a freight perspective. We saw the Southeast really, see some seasonal tightness. And then, as we got closer to August and even in the early part of August, we saw that, really that seasonal produce season move up into the Midwest. We saw that tightness, especially on the refrigerated side of things, move as well. So, not calling the freight market predictable, but we're seeing predictable type of behaviors from the freight market and predictable challenges from a capacity standpoint as well.
The freight market is not predictable, but it's cyclical. That's a better word, I think. Cyclical. It'll follow the same kind of patterns. While the day-to-day might be a little insane, it's very cyclical. And it kind of makes me happy that we're starting to see this return to normalcy, or this predictability of like, okay, well, I can expect that, in the late summer where we are right now, we're going to see that increase in reefer demand. We're still going to see that produce harvest. We're still going to see those produce loads coming in. And I'm sure here in a month or so, we'll start seeing flatbed capacity increase as we enter hurricane season in the Southeast, which is not great. And that's not the volume I want to see return, because that means that there's a lot of destruction. But unfortunately, it is just the nature of that time of the year.
Yeah, hurricanes now are starting to hit on the West Coast too. So who knows where these hurricanes are going to be? But yeah, certainly as we get into September, you see you talk about the cyclical nature of the freight market on an annual basis. That period between Labor Day and the end of the third quarter. You see a little bit of tightness. So, that's certainly the next period where we expect some of that to be, some of that could be as a result of, like you said, hurricane season and hopefully not storms hitting, the Southeast coast or Gulf Coast, but certainly a possibility.
Yeah, I would prefer that the flatbed market increase because there's like new housing or construction, but, hurricane season works too. But one of the things that we've seen pretty much for most of the year is we've seen rejections in 1% in some markets, which is insane. But then also like all the way up to 3%. So, you've got 96, 97% of carriers accepting all the loads that's tendered to them. But now we're starting to see those rejections creep up to, a national average of about 4%. And so I think one of the trends that we've seen is now that the rejections have increased, but spot rates haven't necessarily increased in the likely manner. Because I think at least what I've seen is that the first carrier gets like they reject it, but that second and third carrier that's like on that routing guide might be getting more volumes. Do you think that's something that we can expect to see kind of heading into the rest of the third quarter?
Yeah, certainly, right? I think it was an adventure finding the spot rate floor, I guess, so to speak, and certainly there was a lot of carriers, participants in the industry looking to capture volume that might have got a little out ahead of their skis a little bit, right? And they're finding challenges with either keeping up with the demand or the profitability perspective, especially now that we've seen fuel increase, right? Fuel costs increase. So certainly seeing a little bit more sensitivity to spot market volatility on the routing guide side, right? So when you see regionally, some demand surge or some increase in rejections for some reason, increased spot rate, shipper routing guides are going to feel a little bit of a bump as a result. But you mentioned right where they're at, right? It's important to keep that perspective in place, and certainly 4% is not as good as 2% from a shipper perspective. But really till we get to like 8, 9, 10% is when you start to see true routing guide disruption and really from a sustained perspective. So up until then, I think it's just sort of shipper beware. We're not in the same sort of dead market we were, but we're not quite out of the woods yet.
It feels like, during the pandemic, the carriers held all that pricing power, and then when the market flipped, the shippers were holding it. And now I feel like it's kind of almost an equilibrium of sorts, where it's like the shippers, they know that, okay, well, there is some volume returning to the market, so I have to, have competitive rates and, not have super long load times and pay on time. And carriers also, they're not gonna put up with any more tomfoolery. They're like, there is some demand out there that I can go participate in. And now I think it's really kind of that come together of like, okay, well, we're kind of more on that balance out and more even keeled. So let's go ahead and start fresh and hopefully finish out the year strong.
Yeah, it's a point of changing strategy for a lot of the participants in the market, right? Shippers are aware that a lot of speculators are looking at potential disruption mid-year next year, and if you're putting year-long RFPs out there right now, especially for freight that's going to go live in the new year, there's a risk associated with continuing to chase the lowest cost provider. And on the flip side of that, carriers and brokers and all the other participants looking to capture volume and bid on freight, it's from that perspective, they have to be cautious about what they're quoting, and in some cases be okay with being number 2 or 3 on the routing guide, not to put themselves in a position to fail.
I have long since been a fan of, you don't have to be the first round draft pick. Dude, sometimes you just have to be around, like you're not always, it's okay if you're not the first pick, because when the first pick inevitably messes up, you can just be that guy who just happens to call and just always be around. If you need anything, I'm here. And what do you know? Suddenly I need something and you're here. On the hunt, one of the things that you brought up is, those shippers that are always looking for those lowest cost carriers. Do you think that the bankruptcy filing for Yellow, do you think that will cause some shippers to maybe rethink that low cost alternative? Because there are still low cost LTL carriers out there, but it's, you kind of get what you pay for sometimes with carriers.
Yeah, that certainly can be the case. As far as what we saw happen with Yellow, I think, shipper beware, know who you're partnering with. And I think in a lot of cases, shippers that had a lot of sensitivity around their freight, they were able to be proactive and make adjustments and make other plans for the movement of their freight. And certainly, you pull that much capacity out of the marketplace on the LTL market in particular, you're going to see, prices come up a bit, especially if you have that service expectation. That's something you're going to have to pay for right now as the market kind of moves through that disruption. We haven't seen a lot of disruption from that filter over to the truckload side, though. Yet, at least not yet. And so that's at least something shippers can be aware of, right? Where does it make sense to look at some consolidation and maybe not moving a pallet at a time, where that's possible. Certainly that can be an option.
That's something that I think I might be pretty excited to talk about to you with the next month, because by then, a lot of that volume will calm down and, people will kind of worked out a plan and then, you launch into bid season and all the insanity that comes with that, which is not a fun time, if I'm being honest.
Depends on who you are.
Exactly. It could be fun. It could be some people's favorite time of the year. It was never mine. Um, but back on the full truckload side of things, we have seen that gap close between spot market rates and contracted rates. What is kind of that driving force bringing those two together? And, what ends up happening when there's not that big of a spread between the spot market and the contracted freight? Does anything really important or significant happen?
I think it's a great question because I think it's a really important relationship to look at. That being where spot rates are at compared to where contract rates are. And certainly where spot rates are really leads where contract rates are. And what I mean by that is if you're a shipper looking at contract rates, typically what you're going to see is pricing that sort of mirrors current spot rate market pricing, right? So if spot rates are low, you're going to see downward pressure on contract rates. And that's what we've seen, right? And just the nature of the way that the contract market works, rates typically historically have gone out to bid on an annual basis. There's certainly been more frequent pricing exercises on the shipper side of things, especially since the pandemic and with how quickly rates have moved. But that's why we've seen contract rates lag. And now that the spot rate has really found a floor, so to speak, found a floor leveled off, that's enabling contract rates to sort of catch up to where spot rates are, right? Contract continues to fall, and that's sort of what's driving that closing gap. And, it's very similar to what we see on the tender rejection side of things. There's sort of a point where the market becomes more vulnerable. And when you start seeing 8 to 10% rejections, typically that's largely because you're starting to see carriers see a lot of opportunities in the spot market that might be better than the opportunities that they see day to day contractually. And certainly we don't want to make any assumptions carriers are dropping the ball on their contractual obligations. But certainly if there's a lot of opportunity out there for money to be made, that's a business decision we see a lot of carriers and participants make.
I feel like when that switch happens up to when the spot market suddenly is becoming more profitable, I mean, I'm not saying, the 20 to 25% rejections we saw a couple of years ago, but when that switch does happen, I think that it will happen quickly because for so long, over the past year, carriers have been, struggling to kind of keep a cash flow positive in certain areas, especially those that focus primarily on the spot market. I think that when that switch happens, it's going to happen fast and it's going to, I want to say almost catch everyone off guard, but maybe not, maybe not.
Well, I think it depends on what type of catalyst event we look at, right? I mean, the event it could be a typical seasonal pattern, right? It could be, okay, now we're into produce season next year. And, that could be enough of a demand disruption as capacity has sort of gotten balanced and becomes more sensitive to demand fluctuations where you could see that, right? And that's sort of our base case is, largely because we can't really forecast a Category 5 hurricane hitting or something to that degree, right? We're not necessarily in the business of forecasting black swan type events. However, I think really looking at when the market is vulnerable to disruption from one of those events, and we're going to place a lot of probability around one of these seasonal demand, fluctuations being the cause of that disruption next year, simply because, that's an area where we expect that change to happen. We can't really count on an act of God.
Yeah, it's that return to cyclical nature that freight loves. Because honestly, I don't think anyone wants to be that one that says, oh yeah, there's going to be another pandemic or there's going to be a natural or hurricane or natural disaster that like injures millions of people. Like nobody really wants to be that guy that says, oh yeah, this is going to happen, because that's just not fun.
It's certainly not right, when they say it's going to happen.
Exactly.
No one wants to be right.
That's not the one where you want to be there going, told you so, because that's not it. That's not the move.
It's also hard to make decisions off of events that haven't happened, right? And I think there are certain things you can count on happening. Major disruptive type weather events, not one of them.
So then we've seen a lot of, drivers leave the market, or at least, the FMCSA has revoked some authorities and there's just not as many new entrants. Do you think that's because drivers have swapped to become company drivers, or no one's really getting into the trucking industry? what's kind of this driving force pushing carriers out of the market, or at least letting their authority lapse?
Yeah, it's the data is a little bit murky on exactly what's happening, right? There's certainly signs in the data that point to over the last 18 months, owner operator capacity deciding it wasn't worth running on their own anymore and looking to company jobs as a means to continue operating in the trucking market. We've certainly also seen poor trucking conditions in terms of the spot rate environment really not being profitable for carriers, right? It certainly rates have gone low enough, especially now that we're seeing pretty rapid increase in fuel charges here over the last, we'll call it 4 to 6 weeks. That's something that can put a little bit extra stress on carrier margins. So if business just isn't the same profitability that it was, you get a lot of ability for workers in this space, drivers, to move from one industry to another. That's certainly something we've seen in the past, right? So I think overall opportunity is down from where it was. The opportunity to make really good money kind of it subsided as sort of some of the pandemic trends subsided. So we've seen a pullback for that nature as well.
I am really curious to kind of see how that ends up shaping up for the rest of the year, because I know there's some proposed rules and regulations that the FMCSA is trying to, get passed and get off the ground that allows for younger people to get involved in trucking and, maybe reducing that interstate transportation, reducing that as well. So I'm very curious as to how that ends up shaping up, and also, how insurance goes, because I know a lot of insurance companies are less likely to give, an 18, 20-year-old favorable insurance rates for their truck versus someone who's maybe been in the industry for 20 years and has a clean safety record. So I'm curious to kind of how that ends up shaping up throughout the rest of the year, because it stands to be a pretty substantial thing if if they lower it and a bunch of 18-year-olds get in the industry. It cause a lot of new entrants. It could also, help secure and make sure that, drivers are spread out across the country where they are, to at least kind of alleviate the impression that there's a driver shortage.
Yeah, I think we go back and forth on in terms of sort of, is there enough capacity in the road? Is there not? Is there too much capacity on the road? And is there a driver shortage? There's not a driver shortage, right? We're certainly in a marketplace that appears oversupplied right now. But one thing we know is that truck drivers are an aging workforce. And so whatever can be done to try and pull younger generation into the workforce at an age that, these truck drivers, the new entrants, whoever they may be, take pride in this job and in providing, safe driving operations and stick with it for a long time. I think that's best for everyone and best for the industry, best for the American consumer. So whatever we can do to attract a new younger generation to the truck driving, we'll call it profession in a way where they take pride in it. I think that's a win for everybody.
I will say, much to my hesitation, I will give TikTok and social media some credit, because there's been some driver accounts that almost kind of glamorize trucking, and it's kind of been like to the point where I'm like, oh, that actually kind of looks fun. But then I remember like being on the other end of that phone when everything goes wrong, and I'm like, but the good is good and the bad is super bad. But I kind of like that. There are some people out there, kind of some trucking ambassadors, making it like, glamorizing a little bit, making it a little more fun.
Everyone looks at things a little bit differently, Mary.
So one of the things that I am curious for, because everyone's wondering, will this fall, not this fall, will this winter, will we have a traditional peak season? Will we see that retail number increase? So the National Retail Federation actually has said that year over year imports are declining for retail, but they still expect those import numbers to turn positive at the end of the year. And so for the most part, everything being imported in December will be sold the first half of next month, because the nature of the retail cycle. Do you think that Christmas will save trucking and give it the volumes that it needs?
Well, I think maybe not this year, right? I think that's unfortunate from a demand perspective, right? I think you look to a year ago, one of the first movers from a destocking perspective was really Walmart, right? And so looking at their activity is probably a good gauge of where we are in the destocking process, right, and where the rest of the retailers are to follow. I know that you guys have recently published data around increased activity inbound to Walmart facilities, right? And so that could be a good sign that, hey, we're starting to see inventory levels come back down to normal levels. And as we get into next year, we're going to see more healthy, normal retail ordering patterns from overseas, and drive a growth in imports just from kind of getting through this destocking phase, right? Even if consumer spending remains stable, we'd expect imports to increase next year, just a result of sort of drawing down inventories. But that brings me back to your question, right? I think we still have inventory buildup, and with that said, we also are looking at NRF data to look at, their forecast had this month being really the peak for import season. So I think a lot of freight is going to be in position by the time we get to really that typical Q4 peak. So our forecast is not calling for anything substantial in terms of Q4 peak season. However, there from a demand side, but there's still sort of a capacity constraint that we've seen, especially in recent years between Christmas and sort of early to mid January, that we are concerned about causing some spot market volatility, pretty serious. So we do think that there is an opportunity where we would see sort of constrained supply, but more from capacity and drivers taking time off around the holidays.
Okay, because I mean, if I've been a driver for the past few years and I've been working absolutely crazy, I'll take a Christmas off. I'll take some time off because the beginning half of this year wasn't exactly the most profitable, and if I'm not going to end on a strong note in December, I might as well take the time off, enjoy some time with my family. I feel like 2023 has just kind of been the year of like level setting and just kind of rebalancing everything, and I'm optimistic that next year 2024 will kind of be that return to the cyclical nature of trucking. So it's our favorite part of the show where we get to ask you a ridiculous question, and you have delightful answers. So this one, I think it's a little interesting. It's transportation related. So David Spencer, if you could have a superpower related to transportation, would you choose the ability to instantly teleport freight anywhere in the world, or the power to make traffic lights green whenever you approach them?
I will say that, Mary, you did cut out for me briefly there. I don't know if it's my end or what. Can you repeat the fun question here?
So the fun question is, if you could have a superpower related to the transportation industry, would you choose the ability to instantly teleport freight anywhere in the world, or make traffic lights green whenever you approach them?
So I would probably choose the ability to instantly teleport freight anywhere in the world, simply because, that would probably make our service scorecards pretty excellent. And then, I can do whatever I want, right? We can get around town, we can make all the lights green if we have that kind of power. So, no, I don't know. I think definitely probably the ability to transport freight instantly anywhere around the world. That'd be pretty badass.
I feel like also you would be the guy that anytime something's delayed in the office, they would call you and be like, hey, David, come over here. You got to get this moved.
Yeah, I'd have that power apparently, just snap my fingers and freight goes anywhere. It's a superpower that I'm not sure, anyone will ever have, but it's magical. Sounds magical.
Also an oddly specific superpower for one very niche group of people. So if anyone wants to, share their superpowers with you or pick your brain about any of the freight market updates, where can they find you outside the show?
Yeah, certainly. First place I'd direct you is arrivelogistics.com. We have all of our insights there. So, you want to get up to date on the latest stuff we're publishing or we're putting out there. Really all free insights and guidance on the freight market. That's going to be your hub. Also, my contact info is there as well. But, if you want to reach out to me, I'm pretty active on LinkedIn, and you could probably bounce around your past shows as well to find some other good content from me. But really, those would probably be the main places I'd direct a lot of traffic for getting in touch, and certainly willing to talk shop with anyone interested. So thanks again for the opportunity, Mary.
Find Check All the Podcasts anywhere you get your podcasts, like Apple Podcasts and Spotify. Don't forget to check out all the other incredible FreightWaves podcasts, such as Tracks Through Time and Loaded and Rolling. Don't forget to subscribe to the newsletter at freightwaves.com/checkcall. See you on the internet.